Hi everyone, it's July 1, 2021, and you're watching me, Nikki Yu, also known as Faces Trader. This is the Awesome 10x Global Market Update. Let's begin. So we're going to discuss July already, and we're seeing SPACs actually getting a lot of love. Let's read the SPAC track calendar. Congrats for everyone who's actually been making in SPAC warrants. Let's see what else we have in store. So ASPL is going to have a merger with Wheels Up. So amongst these things, I'm going to tell you companies that I believe upon. ASPL is going to be Jam City, so it's going to be a mobile gaming company. A1 shareholders is going to meet right now and merge with Markforged. This one I also agree upon. DCRB is going to be Hyzon Motors. The rest I haven't studied, I'll be very honest, but this one looks interesting for me. Cellularity, Rockley Photonics, even if I don't know much about these. Why don't we read each one of them? So what is... wait, I have to answer this. Wait, I'll just answer somebody. Okay, so all right, let's read. What exactly happens to SPACs when they change name and they actually merge? Usually the stocks go up, except that Origin Materials fell. Do I know what's gonna happen in the future? Well, what I do know is that Origin Materials is a biodegradable plastics that we believe upon. So if you have Origin Materials as high as 10 or 11 or even at 12, even here at 8, although I don't know how low it goes, we think that Origin Materials will follow the same thing that happened with Ouster. So Ouster actually fell also below 10, also going as low as $7.50 here. You could see that it actually fell 50% from 18 all the way to as low as $8. We're actually buying somewhere at 10 to 8. So right now, this is actually going up to $12. We do think that's going to happen for Origin Materials. So with Origin Materials right now trading at $8, it's actually more of a buying opportunity to me rather than a selling. I'm looking to see whether it bounces at $7.50 or so forth. Now, in terms of SPACs, as you know, A1, aka Markforged, let's take a look at the warrants because this is going to change name this week. Okay, so exactly the date is July 13. So A1 has already grown from 1.5 to as much as 230, and you're seeing that it can actually hit as high as $3 or $4. So it's almost the same price as during the February and March area, which tells you that people are actually very bullish on Markforged. The January-March area, A1 was about $13. Meanwhile, the stock is still at 10. I don't know what the reasons are for the SPACs to actually just stay at 10, but what I've done with all of my SPACs is, if I believe in a company, I just simply switch it to the warrants. Example, if I have Markforged, A1, I would switch it to A1 warrants. And you could see that the warrants actually managed to go up over the last May until today, actually more than 50% up already. So if you were losing, let's say 20% on it, just simply switching on the warrants will already make you up. Okay, let me take a look at other positions. Hyzon Motors or DCRB, also an electric vehicle. Let's take a look at that. DCRB, decarbonization. Take a look at the warrants. So are the people bullish on the EVs? Yes, the answer is it also rose already 50% up. From $1.50, it's now $2.30. I think that the majority of the warrants are growing 100 to 200%. So we would be, if ever you're in the SPAC stock, take a look at these SPACs. Specifically not the SPAC, but actually the warrant. Assuming you've got the stock, you shift your $10.30 SPAC to the DCRB warrants. Let's take a look at these combinations. What is Cellularity? GXGX. Merging with Cellularity. I don't know what Cellularity is. The reason why I'm trying to take a look at these stocks is because right now, a lot of people are buying and selling, or at least trying to learn and invest in a lot of biotech names. Palantir is actively working on stocks and investing in Babylon Health. All right, let's take a look at that. Cellularity and GXGX announcing a merger. Cellularity is entering into a multi-year strategic partnership. So it's going public through a SPAC merger. I think right now you're seeing that the market is basically buying a lot of disruptive SPACs, specifically biotech SPACs. If it's not biotech SPAC, or if it's not an ESG SPAC, it has less news coverage. So let's read about these news. I'm still bullish on Palantir. In fact, Palantir, what you want to do here is just keep on investing and really looking to buy on any dips. So Palantir gave you a buy area about $22, and then there was a good dip here about during the earnings was very good. That was a bullish signal from about 18 to 20. There was really a plan to just hold on to this long term. So even if it goes $30 or 35, I'd say that some of us are just never gonna sell this, and we're gonna wait at about next 2025 or 2030, see where Palantir is. Hopefully by then it's about $80 or $100. But definitely nothing wrong holding a company that's just really strong in all the life sciences. Let's see how Palantir is now working with Babylon Health. It's loading, so let's see. I'm gonna read to you some news. Oncolytics Biotech Spelar associated with therapeutic efficacy improved clinical outcomes in breast cancer. Okay, ONCY together with Salty announced a new clinical data for breast cancer studies. Data was presented. These patients were working with Roche's PLD inhibitor at atezolizumab before surgery. Okay, so all I can say right now is that the entire biotech space is strong. Let me show to you how it's been moving. Some are getting placements like what happened with Czech last night. But similarly, a lot of companies continue to go higher, like what happened with Editas, Beam Therapeutics, CRISPR, and so forth. Intelia continue to go higher. So you're seeing that biotech as a sector has dropped nearing that 1 year support. And most of the market caps are very small. So I'm actually saying that I'm interested with Ginkgo Bioworks. Nonetheless, I'm taking a look at almost the sector, not necessarily a company, but the sector. So let's take a look at the charts of many biotech names. Let's go for the USA first, and let's go for the big ones. Okay, market caps. All right, so, okay. Take a look at the performances of the entire biotech sector for the year. Performance for the year. Well, it's like 10x everywhere, right? Whatever this company is. Viracta Therapeutics, Ocugen was up like 35x for the year. Cassava Sciences, Anovis Bio, Eledon Pharmaceutical, Viridian, Chemomab. So some names are so strong, but they also went down. So Curis, diba? Curis, biotech name, from 16 to 8. I think like what's happening, Cesen Bio, also up. I'd have to assume that not everyone knows what's happening with these stocks, but they're buying the charts. Let's take a look at each chart, quick format. All right, so from a chart perspective, people will buy uptrends or the companies that they already know are vetted out. For instance, everybody knows that Intelia went up, so any dips of Intelia will get a buyer. And Vita, I'll say my ideas in the space, but definitely in the space, we've been looking to buy more dips on Bio-Nanogenomics and PacBio. So you're noticing that PacBio and Bio-Nanogenomics actually are sleeping right now here at $7. Nonetheless, 7 is actually 14x from last year. This is 55 cents here. This is $7 here. On dips here at about $5, we also bought. We know that this correction was just a drop because of a massive movement from 55 cents to $17, $18. So what's happening with Bio-Nanogenomics is really about genetic editing, getting a lot of coverage, and people are actually seeing that we will break our codes, meaning all of your GATCs, we're going to be able to program and edit your genes. So before we do that, we have to do a lot of sequencing, and Bio-Nanogenomics is doing that with Sapphire software. So any dips of Bio-Nanogenomics at 7 to 5 or 6 is all a buying opportunity. How do you handle that? You can do many things. You could do sell puts at 6 strike. What does that mean when you sell a put? You're collecting your Bio-Nanogenomics at $6 if it ever goes down. And if it doesn't, then you collect a premium. Even if the premium is just 50 cents, let's say you buy one contract of sell puts on Bio-Nanogenomics at 6 strike and make it August 2021, let's say a month from now. I do that because I want to own Bio-Nanogenomics at 6 or lower. In order for me to collect winners at a very good price, the best way, and I've told this to many people, is to sell puts. Sell an out of the money put. Right now, a $6 strike is good enough. A $5 strike is even better, but that's something that is possible for Bionanogenomics. How about for PacBio? Should you chase it at 35? Nope. I won't chase it at 35, but that doesn't mean that PacBio is not going to 40 or 50. In fact, this is likely to go higher. PacBio and Bionanogenomics is actually partners. In fact, PacBio is stronger in the space. If you've heard about Ginkgo Bioworks and PacBio work together. And there's a lot. Like, there's companies like Twist Biosciences also working with Ginkgo Bioworks. So how do you actually make money on these trends? Number one, you have to learn more and you have to read more about the healthcare sector. Charting is just one factor. That's not going to be enough. You still have to listen to the updates that are actually being covered straight by the PhDs and the the PhDs and the scientists. So for Twist Biosciences, for instance, you cannot actually, we gave a buy reco at $100, but if you didn't buy low, what you gotta do is either sell put 10 to 20% lower because you know that these are gonna be buy the dips type of companies. Twist Biosciences at 140, there could be some selling, but if you could sell a put with a strike of 120, you should. For those who don't know what a put option is, a put option is the ability for somebody to sell their shares to you at 120. So by selling a put, somebody is buying a put, right? So you are the seller, you get a premium. Let's say the premium given to you is about $5. So at 120 strike, you're willing to buy. And since you got a $5 premium, that means 120 minus 5 or 115 is your actual cost. You're committed to buy 100 shares for every contract that you sell a put upon. You do that only if you're bullish in the sector. So example, if I'm bullish on Twist Biosciences, I'll do that. If I'm bullish on biotech in general, how can I do that? Okay, so a lot of people just do biotech through ARC Genomics. Nothing wrong with that, except that there's a lot of ways to make money through your knowledge. If you know that everyone's entering through ARC Genomics, what is the largest company inside ARCG? Well, it's the companies such as PacBio, Teladoc, for instance. And so how would you make money from it? You can see that Teladoc, of course you have to do your fundamentals. We do know that Teladoc is a leader in telemedicine space. And not just that, they're actually a platform. So they're able to help people who have diabetes. Of course, they own Livongo as well. So they have a lot. What you want to do here is buy it on dips. If you don't know how to buy on dips, you sell puts. That's something that we always teach people. Sell puts at about a clear price. Sample here, Teladoc. Where would be the sell put strike beneficiary? Better buy here about 149, right? So if you want to buy at 149, all that you got to do is sell put at 150. You collect a premium, whether that be August, September, November, December, with the option to be the last. When you're selling a put, you're the last resort buyer of Teladoc. And I think that doing that for your positions, selling puts on Teladoc Health, selling puts on Twist Biosciences, selling puts on PacBio, and selling puts on Bionanogenomics is a good thing. Let's take a look at news happening right now. Disruptive technology SPACs. All right, so we know about Desktop Metal, Ginkgo Bioworks. Yes, I like those. Actually, Desktop Metal is right now currently trading at $11 or $12. So it's actually an entry point. GNPK is going to be in the space infrastructure. Yes, Redwire, agree with this. Cellularity, I haven't studied. I'll take a look at it. Supposedly, it's the next evolution in cellular medicine. I've studied Humacyte, and I would agree with this. Universally implantable regenerative human tissues. Yes, I believe in regenerative medicine. And so for AHAC, what we were doing was buying on the warrants. So the warrants are the way to actually make some money on the SPACs. So it's already gone up. From February, from $2, $150, it's now about $280. It's in an uptrend. So people are actually telling me, why is it that the warrants are going up, but the stock is not? And the only answer that I can tell you is, until AHAC changes name to Humacyte, perhaps it's going to stay there at $10. So I don't know how long you will wait. So if you're bullish on AHAC, you might as well just change it to warrant. That solves your problem immediately. Let's take a look at what Cellularity is doing. Let's read. Not quite interested with software SPACs. Okay, I've read already Humasite. This one is space. Yeah, so let me take a look. GNPK, I've heard about this already. So Redwire, it's space related infrastructure. Arrival, everybody knows about this. This is about buses, electric buses. Where's Cellularity? Anyway, I'll put a lookout for Cellularity. Cellularity is gonna go public through a SPAC merger. Cooley advised Cellularity. This is a clinical stage biotech developing off-the-shelf allogenic therapies derived from postpartum human placenta. They're gonna be a public company merging with GX acquisition, GXGX. So their new ticker symbol will be SALU and SALU warrants. Alright, so these stocks, including Sorrento Therapeutics, affiliates of Bristol Myers Squibb, Star Insurance, Dragasac, wholly owned subsidiary of Genting Berhad, and private placements are gonna have a post-transaction equity valuation of $1.7 billion, in addition to the approximately $300 million held in their trust account. These investors can also have a participation of $80 million further of GX Class A common stock. Okay, the company is continuing to build out internal discovery capabilities, off-the-shelf placenta-derived allogenic cell therapies. I'd study this one. I'll take a look at this one. GXGX. They have a multi-year strategic partnership with Palantir Technologies. So far, what I've noticed is that almost all the best life sciences company, whether it be Schrödinger, CM Life Science, Ginkgo Bioworks, all of them are working with Palantir. It just makes me high conviction on why Palantir is gonna win with several TAMs, several businesses, whether it be with the government contracts, whether it be with biotech space, and with each of their companies, even in the eVTOLs, they're working with KEL, aka Lilium. So even robotics, they also work with them. So I see the 10x conglomerate in the Palantir Technologies. Let's read this. Cellularity is leveraging all that deep cellular data set to accelerate the research and development, R&D. The investment is going to be $100 million in new funding. So their clinical stage, Palantir is also investing with them with so this is what I like. Palantir can have equity stakes with their own clientele because Palantir sees the businesses that are partnering with them to actually grow over time. So Cellularity is employing Palantir's Foundry platform, securing deep insights for Cellularity's discovery, process development, as well as manufacturing and biorepository operations. They're using Foundry, so it leverages AI, allowing for siloed data sources into a common operating picture. Shyam Sankar is saying, yes, the CEO of Palantir. By the way, this is one reason why I'm bullish with Ginkgo Bioworks SRNG warrant. So I bought this last night, and I will continue to buy it if it ever drop. So at $3, I'll continue to buy this Soaring Eagle, aka Ginkgo Bioworks. So it's synthetic biology. I like the fact that they also took in Shyam Sankar to be part of their board of directors. So let's go again to that. Where was I? Cellularity. Where was that article that I was reading? All right. So Shyam Sankar saying that their approach to cell therapies is grounded in highly proprietary placental cellular technology, has the potential to transform the field, suited to synergize with our data analytics capabilities. Leveraging Cellularity's significant pool of valuable data, we will be able to generate meaningful insights, advancing the current treatment landscape, guiding scientific research. Cell medicine represents the next frontier in the treatment of cancer and many other serious diseases, despite advances on CAR-T. So, one cannot overlook the enormous value in deep analysis of large, complex data sets related to genomics, secretomics, epigenetics, and biological performance of cells in manufacturing and clinical. Okay, so in our experience of 2 decades in the procurement of postpartum placentas from over 50,000 newborn donors, we have amassed a vast repository of data that could hold valuable insights guiding the development of future programs, and with deep learning from AI innovator Palantir. Yeah, as part of this partnership, Cellularity is combining with GXGX And Palantir's investment will bring in new funding to our close combination. Good job actually for both Palantir and for GXGX. GXGX, how I'll do it is through the warrants. So it's gonna merge already this month. So I do see that this $1.36 is gonna go $2 and above. So I like to bet when the downside is low and the upside is as much as 200 to 300%. So I'll go for this one, GXGX warrants. I'm gonna tell you a few things further. In China, there's a company called Nayuki, Hong Kong. So 2150. I'm not sure why it's not moving here, but it got listed in Hong Kong. I think it's listed at 6 times price to sales, whereas Haidilao is trading at 3 times price to sales. So I think that both names are good. After a drop of Haidilao to a more attractive 3 times price to sales, since I believe in spices as a whole, spices and restaurants, Asians definitely love hot pot. Filipino Chinese are also in love with hot pot. So Haidilao is a play for me in the entire expansion. Haidilao is expanding not just in China but also in Singapore, in Thailand, in Asian countries basically, not just China, Hong Kong. Let me read to you the entire story. Why I like Haidilao is that it represents to me a growth story in twofold: restaurants and also in spices. Because just like how a company like a McDonald's grew, in Haidilao's case, they're selling those packs. So you can actually enjoy Haidilao Hotpot even if you're at home. So I like it that I like the fact that I'm able to buy it at 50% lower right now, and it's now 3 times price of sales. I know why it fell. The reason why it fell was because all of the restaurants that they expanded are not doing well. Definitely because of COVID pandemic. So it represents more of a reopening play, and it represents the ability for the brand to actually recover in time. So as the valuations have become compelling, even if $40 goes down to $20, take note that I will be a continuous buyer. So a 50% drop is attractive for me. An 80% drop is even more attractive. That's how I buy. It's down 60%. I would be a big buyer if it goes down 70 or 80%. So $40 and $20 is where I'll be buying Haidilao. It's a cost averaging solution for me. I see this as a long-term buy. Okay, let's read Haidilao, all the news from it. I'm not sure if this is in English. So for over 20 years, Haidilao is now running more than 400 plus restaurants. We went to Hong Kong, and I think about a few years ago, I couldn't even enter Haidilao because, it's just fully packed. Like usually, the reason why a company is doing so well is that there's a lot of customer demand. So party on Haidilao Hotpot. It's very simple, I know, but a simple brand can scale very well, just like how McDonald's and Shake Shack and Starbucks scale so well. So I love brands like these. Cuisine, very simple for the Asian world. So China, Singapore, United States, Korea, Japan, Canada. So I'm playing this: Australia, Malaysia, Vietnam, United Kingdom. They haven't gone to the Philippines, but in the Philippines where I reside, we can enjoy Haidilao Hotpot just by simply buying the pack. So we just do it at home. So Haidilao brand was founded in 1994 in Jianyang, Sichuan. Since 1999, it gradually opened up to markets in Xi'an, Chengzhou, and Beijing. In 2015, the restaurant opened up in Taiwan. They've got 10 stores opening, and by now, in 2017, the restaurant opened up in Hong Kong, opening 2 stores. After more than 20 years of development, Haidilao now runs 400 plus restaurants in 100 plus cities in China. They've got 800 plus branches, and located cities are 160 plus. So when I take a look at Haidilao, I'm looking more on a competitor for Yum Brands, Yum China. So I know that you might think, Nikki, eating hot pot and eating fast food, that's very far off. Like, that's not the same. Well, that's true, but Haidilao price point is not so bad. It's not like, it's casual. I'd say it's casual dining. Similar to a Shake Shack. It's not fast food, but it's not also that bad. So let me show to you. This company actually have I actually read a little on the news. Of course, they have bad results for 2020. It's obvious. Any restaurant is bad news. So I know what I'm getting here. But let me show to you all the stuff that is positive on my end. Why I'm believing in it long term. So me, I think long term, not thinking about the next 2 to 3 months. That's why we win. Okay, let me read to you. It's good that they have English so that the people who can't understand Chinese can read it. So, outbreak of COVID pandemic faded gradually in China. Yes. So, I know that right now there's still COVID cases in China, specifically in Guangzhou. But I do believe that, and then of course there's those Delta variants. Nonetheless, they're well on their way to recovery. There are just like more than 1.7 billion doses already vaccinated all over the world, with China, US, and Russia and Australia actually doing very well in in a country standpoint. So this is more of a country play for me. The fact that Yum China, let me show to you the discrepancy. Yum China, of course, operates KFC and Pizza Hut in China. Take note, these are all-time highs. So I do think that that is gonna be what's gonna happen with Haidilao Hotpot, and so that is my template. What happened in McDonald's, what happened in Chipotle, for instance, is gonna happen to Haidilao as well, which is gonna go all-time highs, recovery to all-time highs. Let me see to you. Let me share to you the things that they've done. The company sped up all the efforts to open restaurants when the business conditions gradually recovered. So, of course, epidemic rage overseas, severely affecting our restaurant in overseas markets. Throughout 2020, in a pandemic, they opened 544 new Haidilao restaurants, and now they've expanded to 1,300. So they are a growth company, just like what any Starbucks would do. They now have 1,200 restaurants in mainland China, 93 restaurants outside mainland China, including 14 countries such as Hong Kong, Macau, Taiwan, Singapore, Vietnam, Malaysia, Indonesia, South Korea, Japan, UK, US, Canada, Australia, making the brand Haidilao known all throughout, spreading the Chinese-style services overseas. After years of hard work, Haidilao is widely recognized by customers. They serve more than 250 million customers already. An average turnover rate of 3.5 times per day. Number of Haidilao members increasing to over 71 million. So it's similar like a Starbucks, right? 71 million loyalty cards, something like that. So our Members Day is an online reunion wherein there are new products, evaluation meetings, do-it-yourself face paint in order to improve the member experience and stickiness. We also entered into cooperation with many banks for the convenience of customers. We aligned the dine-in membership system with the take-out membership system, and we provided discounts to customers who ordered takeout or picked it up in our restaurants, and launched fresh products and convenience food so that the customer can enjoy Haidilao cuisine at home. So I was saying that I like Haidilao because you can take it out, take home. For instance, like in the Philippines, we don't even have Haidilao here. I can just enjoy Haidilao Hotpot because I have those Haidilao packs. So it is something like if you're buying seasoning and spices, if you are a believer of McCormick spices in the long term, this is just like that. McCormick spices for the Chinese cuisine. It's like Kikoman for Chinese diners in the case of Hotpot. So it's really a staple. So it's a growth story for me, and I like the fact that they're diversified. Let me show to you the revenues. It was an arduous year for all sectors of society. The catering industry, significant decline for the year. Management shortcomings, yes. We failed to find some effective solutions for the customer experience. So we had to do a lot of deep reflection. So our outlook is, initiatives, of course, is we're going to still expand our coverage of our restaurants and increase our restaurant density. We will enhance the dining experience by offering more value-added services to the guest. For your information, if you wait in the line of Haidilao Hotpot, they just give you free massages, free services. That's a value add. That's why there are so many people who love to go to Haidilao and eat, because even if you're waiting, they're able to give you that customer experience that you'd love. Like they can just clean your nails and stuff. So I mean, I know it's a weird thing, but Asians love those value added services. The dividend, they gave about 2 cents Hong Kong, equivalent to about 18 cents yuan. Not bad. The fact that they just willingly will give dividends is an appreciation to their shareholders, even on a hard year like 2020. Okay. Revenue so far for the year for 2019 to 2020 was up 7%. Something that Starbucks can't say, right? Well, Starbucks only grew after recovery. So yeah. So, by the way, I'm a believer of Starbucks as well. I will discuss later on what's happening with the coffee space and what happened to the defrauded coffee, which is Luckin Coffee as well. So, okay, revenue from Haidilao operation, 95% of revenues are in China, of course, and it came from business expansion. Turnover rate is still good, 3.5 times per day. That's why I think about it like a fast food, because if you're having that turnover, that's kind of fast. Average spending per guest is 110 yuan. That's roughly, guys, about around 800 Philippine pesos. In US terms, that's about $16. So it's not that expensive if you think about it. Average spending per guest. So you can see that it's really more like a fast food for Chinese people. Okay, it's not fast food, casual dining. All right, that's the proper term. Okay, yeah, so you're seeing growth. Tier 1 cities, 255 restaurants. Tier 2 cities, 499. Tier 3 cities and below, 451. This is an expansion of consumer expenditure. You know about how Chinese people have promoted third baby policy, right? That's also a secular trend that will benefit Haidilao. Of course, as more and more people even appreciate Chinese brands, I think that it's a good brand that's expanding outside mainland China. So in Asia, I'm pretty sure that we love Hotpot. Not quite sure if Americans love their hot pots, but there's a lot of Chinese Americans as well, and Chinese Europeans and Chinese or Asians there. I'd say that there is that growth. Anyway, most of their expansion is in Asia. You can see 75 stores opened in Asia. And I'm pretty sure they just did a little exploratory moves in Europe and Oceania just to serve those customers. But mostly this is an Asian-based business for now. China and Asia. Okay, what was I gonna share? Haidilao I like. Okay, so I like, last night there was also Luckin Coffee. They restated their financials. So this is a company that had an accounting scandal. They paid just a few $1,000,000, like $10-20 million for the financials to be fixed and rebooked. So this one suffered from $28 all the way to about $2, or a 90% decline owing to an accounting scandal. And so far from $2, it has already gone 5x, 6x to about $11-12 simply because of a change in management. I'll read to you the exact news on Luckin Coffee. Luckin Coffee is going to be the competition. Of course, in the past, they said it's a competition of Starbucks. But with fraudulent management, of course, you can't compete with Starbucks. You have to be truthful to your investors. So they had a scandal, accounting scandal. The big news that has been perking up is, of course, the restatement of their second quarter and third quarter financial results in 2019. And my guess is that the market is seeing this as a turnaround play. So they actually managed to have $1 billion pre-IPO so they can pay their creditors if ever. And we'll see whether there's going to be an acquisition on Luckin Coffee someday. But nonetheless, it's not a buy for me. I'm just sharing to you news. The real buy for me is Nayuki. Yeah, Nayuki, which is quite expensive. But since Nayuki is expensive today, I hope to get it at a cheaper price. Nayuki IPO, I'm going to read to you. TP Response, the world's first milk tea firm in South China. No problem. I love it. So I'll be happy. The reason if the fruit tea company is flopping is because it's 6 times price to sales. So I do want to buy it lower if I could. So let me read to you this one. Shares of Nayuki opened 4% lower despite strong investor interest in the company IPO. They sold about $20 Hong Kong. 250 million. Price worth, it's approximately $4 billion. At $4.5 billion, I think some people want a better discount because this is 6 times price to sales. So if you're gonna compare Nayuki versus as I said, Haidilao, Haidilao is a cheaper way and it's a growth play as well in the same area. So nonetheless, if this goes down near $10, it's gonna be a buying opportunity in my view. So watch out for this, Nayuki. This is gonna be a good IPO to enter into. Yeah, people are comparing Nayuki to Haidilao and to Matiao. Yes, people think tea chains are very different from restaurants. Nayuki has burned close to 137 million yuan opening stores. Their tea sales have dropped 27% because of 2020 pandemic. And so some people are afraid that there are less people who will drink milk tea and fruit tea going forward. I'd say no, but let's give it some time. Okay, let's read some more. No, in China, some of your Chinese cars are all doing V-shaped recovery. XPeng is listing its Hong Kong shares this year, the fifth largest stock listing this year, pricing it at 11% premium versus the US. So this is XPEV. It already rose from about $21, $22 here to as high as 44, so almost 100%. If there's significant interest in Hong Kong, XPeng can hit as high as 52 or 60. I'm looking to actually tell some, I've been saying to some clients to actually sell calls on XPeng at $60. And same thing for NEO. If NEO and XPeng hit 60 above, think that's a good selling area. So whether you're selling calls or, yeah, selling calls is appropriate for those who have shares. It's not a naked sell, it's a covered call option. Okay, there's so many news like last night, Check actually had a placement at 1.1. So for Check, this is a company that does cancer-related strategies for colon cancer. They're raising money. So what I can only say here is that at $1, people bought it up. And there's insignificant interest. That's why they were able to hit a placement. Sometimes a placement can take a long while. It could consolidate from $1 to $1.40. But those who believe in the company being able to hit a lot of solution for colon cancer, you might want to buy into $1. But really, if you have a lot of healthcare stocks, just be aware that there's a lot of IPOs coming out in the healthcare space as well. You have more options to pick which company you want. Another example, Palantir is working and investing with Babylon Health, another SPAC that I don't know about. So Babylon Health is, what I can clearly tell you is that Palantir is active in life sciences. If there's one thing that you want to be sure of, Palantir is a winner in all of these. So Kevin Kawasaki, Palantir's head of business development, finding an opportunity with truly talented management team with a big vision. We provide the data operating system, investing billions of dollars in R&D. Palantir helps government agencies collect, Okay, so it is also part of the SPAC 50 index. Babylon is a part of a long-term relationship. They're working with health insurance companies, providing mobile services to patients. They provide the method of providing patients with easier, cheaper access to healthcare providers, including primary care, emergency care, specific treatments. Parcel founded this company 2013, about 7-8 years ago. They've signed up with agreements with governments like Rwanda, so that's Africa, right? Rwanda. They launched services in 2020 through a partnership with insurance company. Babylon Health is expected to trade at $4 billion at the second half of this year. It's a bet on life sciences. Palantir is investing a lot in healthcare. Dr. Bill Katzler is saying that Palantir is gonna be Babylon Health is Palantir's first digital health SPAC, but they already have a lot of other areas in life sciences. So because Palantir also agreed to invest in Roivant Sciences. Shyam Sankar is already a partner in Cellularity, also a partner in Sarcos Robotics, also a partner in Ginkgo Bioworks. I'd say that Palantir is a big player in the life sciences demo. In fact, in the life sciences, and they demoed it actually, whether they were working with Schrödinger, SDGR. A lot of AI is needed when you're doing technology space. So I'd say that for people who are not investing in any biotech, you have to at the very least put a 5% position in 5 names. And if you don't want to think what company, just go for the Palantir investments, because I think Palantir is able to help them unlock. For instance, for Ginkgo Bioworks, that is a huge partner for Moderna. Those are very important things. You might not believe what Sarcos Robotics does, but I think it's worth a dive. It's worth a deep dive. Okay. That's where I'm focused upon. I'll be saying the truth. I'm focusing right now on studying more healthcare and more biotech SPACs. In terms of IPOs, very strong movements. Yes, Clear went up. Graphite Bio. DD Chusheng, I'm not surprised why it didn't go up because it's expensive to begin with, like $1 billion. $60 billion valuation. So you're there. I mean, I'm just sharing what I'm thinking. So there's a question. What do you think of DD? I'll avoid it. Uber made some money there. A lot of companies made a lot of money, such as Tencent and SoftBank. They were an early stakeholder in Didi. Usually, the first 5 weeks or the first 20 weeks of a company that is valued perfectly, like Didi Chuxing, you're not gonna get many. You're not gonna make much. So I think from a risk reward standpoint, I'm not gonna be interested with Didi Chuxing. So yeah, thanks for asking about that. UEC, the uranium giant of that's huge in Canada, isn't it? Alberta, Canada. I haven't studied this one. I was planning to study all these UECs, UEX. I'm waiting for it to go down to $2. I feel as if I missed out, right? So from 50 cents, 80 cents, it went as high as $3.50. Usually, after a company goes 5x, 10x, I do think that the reason why it continues to go higher is the secular trend that uranium is a cheaper form of energy for a renewable world. Nonetheless, when I take a look at the entire sector, I feel as if I've missed out. Whether it be UEX or UEC, there's a lot, right? I took a look for uranium. I still didn't do a deep dive, but I'm leaning on to just putting it in my watch list. Not yet a buyer. In terms of buying, I'll tell you what, tonight if GSAT gives you a drop at 170 below, this is an entry point. Another solution is this one I think I'm willing to buy. So Triple D Systems, we already know, is really an additive manufacturing player for now working with life sciences as well for breast tissues. So you might want to enter at 36 to 33 on any drops. So I'm just right now looking for buying the dips. If example, I like Coinbase, I like Square. If they fall, I'll buy. But if they're not falling, I don't mind. NBIX, I've heard about this, but I haven't studied it either. I didn't study 3S Bio either. Can't say much. NBIX was strong last night, right? Neurocrine Biosciences. I think this has to do with cancer, is it? Let me just take a look. Neurocrine Biosciences. It's just in my watch list, but I've never bought anything in it. They develop treatments for neurological and endocrine-related diseases and disorders. Yeah, it is a what? It's probably a $10 billion company, isn't it? I think this is already an advanced stage biotech company. It's 10 billion, see? I would have thought it's like 10 billion because this one is a very old company already. I'm actually investing more in the new ones. So, like example, if I invested here 2014, $10 is $100. That's what I'm looking for, like the next 10x. So I'm looking for the next NBIX. So usually for my sector coverages, I'm trying to find either a SPAC biotech that is about $2 to $3 billion or less. So that's where I'm looking at, and then I'm trying to study how huge their total addressable market would be. So far, I'd say yes for Humacyte. I'm also yes for Ginkgo Bioworks. Give me some time. I guess I'll study more. I'll try to study that cellularity. But yeah, I'm not buying $10 billion biotech names. If I'm gonna buy a $10 billion biotech name, I'd rather just go for the originals, like for the ones that I already know about. So like I'll just stick to Editas, CRISPR, Intelia, the usual, Invitae. Yeah. So I'll just stick to the usual. But if it's SPACs, I've been buying CM Life. Oh yeah, I'm down I think in ARIA, right? So NOT is still down. Yeah, this one I'm still down. Okay, it's back. It's $10. Yeah, initially it fell to 9, so I was initially down. Now it's 10. Yeah. So Nautilus, yeah, we are a buyer of Nautilus as well, aka ARIA. So yun. Thanks. It's been a long time. Bye-bye.